All right, today we're pulling back the curtain on the hidden rules of money. We're going to cover everything from how the giant global economy actually works, all the way down to the forces that are shaping your own personal wealth. Let's jump in.
You ever feel like that? Like you're playing some high-stakes game, but you were never handed the rulebook? Well, you're definitely not alone. The whole financial system can seem, well, intentionally confusing, packed with jargon and all these invisible forces that are quietly running our lives.
But you know what? It doesn't have to be that way. The core ideas are actually pretty straightforward once you strip away all the noise. So that's what we're going to do. We're going to give you the rulebook nice and clear. Okay, first up, let's start with the really big picture stuff. What money even is, why governments can't just hit print whenever they want, and the real story behind all that national debt you're always hearing about. It seems like a pretty basic question, doesn't it? I mean, they're both just money, pieces of paper, numbers on a screen. So why all the different values? Well, the answer isn't just some random number. It's basically a report card for an entire country's economy. So here's the deal. A currency's value is a direct reflection of the economy behind it. Think of it like a stock price for a country. Is the country growing? Is it making stuff people want to buy? And, this is the big one, do people around the world trust it? If a country is selling a ton of goods, people need its currency to pay for them, and that demand drives the value up. It's all just one giant, shifting marketplace that runs on performance and, more than anything, confidence. This is a classic. It's probably the most common question in all of economics. If you can literally create money from nothing, why not just print your way out of any problem? Well, there's a very, very good reason why that is a catastrophic idea. Let's make this super simple. Imagine an entire economy that only has 100 loaves of bread. Now, what happens if you double the amount of money floating around? Well, you still only have 100 loaves of bread. You haven't created any more stuff. You just have way more dollars chasing the exact same amount of goods. And what's the result? The price of everything doubles. See, printing money doesn't create value. It just dilutes the value of all the money that's already out there. And hey, this isn't just some abstract theory. It's happened. In Germany back in the 1920s, the government printed money so insanely fast that the currency became completely worthless. People were literally using stacks of cash for wallpaper because it was cheaper than buying actual wallpaper. That's a terrifying thing called hyperinflation.
You hear about it all the time on the news, right? National debt. Trillions and trillions of dollars. But it kind of makes you scratch your head. If every major country seems to be in debt, who on earth do they all owe this money to? The answer is actually pretty surprising. A lot of the time, they owe it to each other, and they even owe it to people like us. Governments borrow money by selling bonds, which are basically just IOUs. And as you can see, the people buying those IOUs are all over the place. A huge chunk is held by a country's own citizens in things like savings bonds. Then other countries buy a big slice, and the rest is owned by big banks and investment funds that manage things like our retirement accounts. It's this huge, tangled web of lending that connects the whole world.
All right, now let's talk about some of the invisible forces out there, the kinds that can quietly empty your wallet, or in a worst-case scenario, bring the entire economy to a dead stop. We all complain about prices going up, right? So prices going down should be amazing. Your money would be worth more every single day. But believe it or not, this is one of the most dangerous, most feared situations an economy can ever face. It's called deflation. And here's why it's so terrifying. Think about it. If you know that new car or TV is going to be cheaper next month, what do? You wait. But what if everyone waits? Well, companies stop making sales, so they have to lay off workers. And those unemployed workers, they spend even less, which forces prices to fall even further. It becomes this vicious downward spiral that can completely paralyze an economy. So let's tackle another really common misunderstanding. When a government slaps a tax or a tariff on goods from another country, it's usually sold as a way to punish that other country. But who's actually footing the bill? Yeah, the foreign company, they don't pay a dime. The tax is paid by the local American company that's importing the goods. And what do you think that company does to make up for the new cost? You guessed it, they pass it right down the line. That tariff on steel just made your new car more expensive. It made your new washing machine more expensive. The bottom line is simple. A tariff is just a tax, and that tax always lands on the final consumer, on you. Okay, so we've covered the huge global machine.
Now let's bring it right back home and see how these giant forces connect directly to your life and your ability to build wealth.
Ever wonder why it feels practically impossible to buy a house these days? Well, it's because it almost is. Just look at this chart. This is the brutal reality. If you go back 50 years, home prices were pretty much in line with what the average person earned. But today, wages have barely budged while home prices have just shot to the moon. Housing has gone from being just shelter to being a global financial asset, and ordinary people are the ones getting squeezed out.
Now, when you hear about the stock market, it's so important to know which game you're actually playing. Trading, that's a sprint. It's trying to guess the market's next move to make a quick buck. It's super high risk, and frankly, most people lose. Investing, on the other hand, is a marathon. It's buying a piece of a good company and just holding on for years, letting long-term growth and that magical thing called compound interest, where your money starts making its own money, do all the heavy lifting for you. All right, for our last section, let's pull the curtain back even further. We're going to look at some of the lesser-known strategies and systems, from how the super rich manage their money to how criminals make their cash disappear. So let's say you own a bunch of stock and you need some cash. What do? The normal path is you sell it. But the second you do that, bam, you trigger a tax event. In this case, capital gains tax. And just like that, a huge chunk of your money is gone, straight to the government.
But there's another way, a path the wealthy often take. They don't sell. Instead, they use their assets, their stocks, their real estate, as collateral to take out super low-interest loans. And because it's a loan, not income, it's completely tax-free. So they get the cash they need, they get to keep their asset as it grows in value, and they pay zero tax. It's all about using debt as a powerful tool, not as a burden.
And on the flip side, what about the criminal underworld? How do they make dirty money look clean? Well, it's basically a three-step dance. First is placement. They've got to get that legal cash into the banking system. Next is layering. They bounce it around through a maze of shell companies and complicated transactions to hide where it came from. And finally, integration. They bring the money back in as if it's legitimate profit from a real business. See, they're not hiding the money, they're hiding the crime.
And what about brand new types of money? Bitcoin is this totally fascinating experiment. It's digital cash, but with no government or bank in charge. It all runs on a public digital ledger called the blockchain, where every single transaction is visible to everybody. And maybe most importantly, its supply is hard-coded and capped. It basically proves that you can create a form of money based purely on math, instead of on trust in an institution.
So when you put it all together, from currency values and global debt to deflation and Bitcoin, you realize something really important. The financial system isn't some law of nature, like gravity. It's just a set of rules. Rules that were written by people, and that means those rules can be rewritten. The only question is, what does that next chapter look like, and who's going to get to write it?